No.
What's up, Vince?
Yeah, can you guys hear me okay?
Yeah, very good.
Okay, how's
Can you
my
hear me
camera
now?
look?
Okay, camera looks good. Look, I can hear you and see you perfect, Matt. Where you
Okay.
at?
I'm at home. I'm in our little office area at home.
What kind of books you got over your shoulder there?
I don't know. I'll give you a tour. Hold
Socialist
on.
manifestos, I'm sure.
You see?
Yeah, I love
War
it.
and Peace. You want some War and Peace?
No, thanks. I get enough of that every day in the lumber business. Well, good. Glad to have you guys back on. I mean, been getting pinged by everybody the last few weeks about where were you? And I think between all the travel everybody had and life and everything, we took a bit to get back together, right? So glad we're all back for This Week in Lumber with Matt Beamer, Hampton Lumber Sales, Greg Riley, Sitka USA. Man, I got a whole freaking list of stuff I wanted to talk about. So first of all, I just want to say welcome back, boys. Matt, how are you doing?
I'm great, man. Thanks. I just got back from driving back from San Diego for 2 days. With a 3.5-hour delay in Reading to get new tires.
Oh, road trip.
Yeah, it was a road trip. 1,200
How
miles.
about you, Greg? What's up with you?
It's good to be back. Yeah, it's been thanks to all of those listeners that pinged us over the last while we were on our sabbatical here. Appreciate all the feedback.
Yeah, no doubt. Well, let's talk about it. Since the last time we were here, a lot happened in the market. We went from the last time we talked with a no bid to best market we had in 6 months, right? And
Yeah.
Or more.
So, Greg, we had a good conversation last night. I've got all kinds of stuff: new home sales, existing home sales, home builder stocks, cost of logs, cost of production, what are the great values, mindset of market, and will the funds go long? So I got a whole bunch of stuff I wanted to talk about. What do you think? What do you start at?
I don't think we have enough. I don't think we have enough time for all that right now, Ash.
Well, let's start sizing up from opening up a kid's storybook, the Dr. Seuss book, and say where did we come from the last 2 months? Where are we at right now?
Well, I mean, the market has had a pretty substantial rally. Futures is up 50% in the last 3 weeks. Cash market prices, depending on your item, you may be up 20 to 60%, depending on your item. We were at, I think everybody in the fourth quarter looked at prices and said, yeah, oh, that's awesome. At least it wasn't an all black cat. That would have really freaked me out.
Yeah.
I think everybody acknowledged that, yes, we were at long-term unsustainable prices, but the marketplace participants were very, very, skittish about what their expectations were for 2023. And so we've laid. The pipeline was probably drained as low as it ever gets in the last 3-4 months of the year.
Matt, thoughts on that?
I mean, if you remember the last time we had this podcast was probably 5-6 weeks ago. And I was telling you guys that mills were going to curtail and that inventories were lean and that the people that crunch numbers were in control of market buying and selling decisions. Not us.
You called the bottom.
Well, I did. I was a little early. I think we had an extra, another 10% sell off after the fact. But the point being was that what I was seeing happening has actually happened. And so, the things that were most undervalued, which would be all your low grades. I mean, every type. We bought economy tube of 6 at $85 FOB mill. I mean, those are the types of numbers that you don't see very often, right? And they're not sustainable for sawmills. So, when the math becomes so negative for sawmills, guess what? They shut down. I happened to work for sawmill, so I kind of knew that was going to happen at some point, just from the rhetoric inside the building. And I think, prices are now kind of at a break even or even maybe a small profit level. So it'll be interesting to see if we can really build from here. I think we've achieved a level that mills can run at. And even though they won't make any money, they won't be losing any money if we stay at these levels. So, I don't know. Somebody called me yesterday and asked me what I thought about the market. He's one of my customers. And I said, I thought we'd get back into the 500s. That was sort of my guesstimate at some point, but maybe even touch 600. Beyond that, it's anyone's guess, right? But when you start the year with really low inventory and all of a sudden, housing starts to perk up a little bit, then you just see what's happening right now, which is you catch people flat-footed with low inventory, and all of a sudden there's a mad scramble to fill in. So that's what's happened.
Yeah, no doubt. Let's just jump around a few things here. Greg and I were talking last night about, and Greg went and got all the stats on it. Look how good of a deal that, like Matt said, low grade is. Remember back 6 months ago, low grade and high grade were trading together, and all of a sudden that separation happened. Low grade went a big discount. The 2x4 number 3 Western spruce market, if you just looked at print, is about, well, Greg actually corrected me last night. It's wide, but it's been wider twice, right? Does that sound right, Greg? The spread?
Yeah. I mean, I think we've been doing this a long time, and, our kind of historical was, hey, when, number 3 is, $100 or $125 under, 2 and better, that's kind of an historic value. And when it's trading, $10 to $20 under, it's not that much of a value. I mean, we looked and it got out to $300 twice in the last few years, but those were times when 2 and better were 4 digits, and
that's
the number
that's cash. That's cash. That was cash to cash, right, Greg?
Cash to cash. That's correct.
Yeah.
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 And so, I mean, you look today. I mean, Matt, I'm assuming that you can't buy at print today.
I don't know. I haven't really even been paying attention to print. I've just been looking at, my usage and my flow and what I consider to be value. And right now, I can still buy. Like, as of today, I bought 2x4 number 3 for $200 below what the March contract is. I really like those types of numbers, so I'm going to keep buying.
And like I was talking to a guy.
I mean, I think Ash and I were talking, and we looked and we said, the Western midweek print is probably not representative of where the market's trading at. And, to your point, it's probably $30 to $50 above that price right now.
Yeah.
Yeah. And that'll correct itself.
But the important thing here is, like you said, Greg, what was forwarded right now, it's not only a good relative value, it's a good absolute value from where it normally trades. Just the actual cash price of number 3.
Yeah. I mean, if you call it, if you call it $300 versus a low trade of probably what, 220, Matt?
Yeah.
Yeah. I mean, it's up 80, and 2 and better's up 100 and 110. But, to your point, Ash, I mean, right now the market is continuing to tell us that the cash prices are too low. And I say they're too low because, we've got a futures contract that's $75, $80 over the cash market. And, that's historically a big premium.
Yeah. And then, okay, let's go through a couple of other species. So yesterday, one of the big things, this was a big spruce rally at first. You can call it short covering, whatever you want to call it. I often followed through yesterday on OSB, which was just sitting there flat-footed forever. A little bit of follow through on OSB, which has started. I think pine's starting to pick up. Matt, how are the U.S. species starting to do?
Hemp fir production is down in terms of volume. Just absolute volume of dry hemp fir production has been quite a bit lower in December and January than it was, like, say, September through November. I guess it's just the log mix that we're getting in the West right now. So there's more Doug fir production, which has actually been a good thing for us because green Doug fir has been electric. It's been a really good, even with all the winter weather that California's experienced. And I just drove the whole length of California in 2 days, and I saw it with my own eyes. There's still a lot of damage down there with trees that got blown over, and the ground is saturated. The farmers are loving it. If you drive through the Central Valley of California, which is one of the most beautiful places on earth, by the way, but everything is green and lush and wet right now because they got all that rain. Even as I drove over Lake Shasta, it's not empty like it used to be. It still needs more water in it, but Lake Shasta and Lake Mead and those big western lakes that in the warmer climates the last 10 years have really suffered. So California needed the water. This is good for them, but that kind of weather doesn't really help building, right? We've been able to have a good green market even with that. So I find that interesting in and of itself. Dry Doug fir is doing really well. I think hem fir is just following spruce at this point. There really isn't a lot of hem fir production out there to speak of anyhow. So I know at one point the inland mills were wanting me to make them offers, and that's completely out the window. 2 weeks ago they would listen a little bit. Now it's like, I don't have it, or if they quote you something, they quote you what they want to quote you and take it or leave it. So market's changed a lot.
Yeah, no, and one of the worlds you live in, Greg, and really know a lot about is the Euro market. I mean, let's talk about Euro 16s here, how cheap they are. Even today, relative on a relative basis, and I don't think a lot of people understand that, right? Okay, so most people in the docks now are 550 on 16s, right? Even at 550, where is the board at? Let's look at that.
I guess I'd say like if you look at whether it's Western spruce or Eastern spruce, 2x4 16s, should be in the high, in the high 590s to low 600s delivered based on March futures. That's telling you that the price is closer to 680 to 690 delivered into the Southeast. And for the most part, you can still buy in delivered Southeast markets in the mid 500s.
Yeah, I think one of the things that happened though a few weeks ago, this is what I get concerned about, right? I was in this camp, just a short rally, and it's all gonna and then it's done. Everybody's saying, yeah, but I bought $100 below that 3 weeks ago, so I don't need anything. Right. And
whoa. Time out. Ashley, we all know that when the market goes up, it doesn't matter how much lumber you have, you don't have enough.
True. That's true.
Everybody knows that. It doesn't matter.
So
not enough.
I talked to people last night. I talked to them all week, and they're like, this rally's long in the tooth. Nobody needs anything. Things are going to trade off. And man, I'm like, oh, everybody's telling me that now. And I was still in that camp, right? I'm like, okay, maybe that is the case, but it seems like the market is starting to climb the wall of worry. And these companies that ran big inventories that don't have any, still don't have a lot of inventory. Maybe it's right side. Between Matt and Greg, you guys talk to these big yards that used to carry large chunks of inventory. Did they adjust down too far? And are they back to where they should be? Because I have multifamily guys calling us now asking for advice going all the way out to September.
Yeah, I don't think they're anywhere near where they could be. Part of it is their strategy, going into the end of the year. Part of it is the cost of carry and the cost of interest for, borrowing money to finance your inventory. These big companies have taken on a lot of debt the last few years with acquisitions and whatnot. So they've been, some of the guys I talked to at the buying level have been told, hey, keep your inventory low, even through this rally. So, they're relying on more VMIs in 2023 than they had in 2022. There's less contract lumber going on this year in the open market, but there's more VMI lumber stuff going on this year. And then there's also a little bit more Euro that's been at the ports in the last month or two. And I think that might even lessen a little bit as we get into the bulk of the building season. I think the Europeans are going to need some of that lumber to stay at home. I don't think they're going to send it all over here. But if our market keeps improving, then they'll stay here. They're not going to leave us. But I don't think anyone that I talk to or deal with has expressed to me that they want to get really, really long on lumber. You know, they're just fighting it. They just have to buy what they have to buy, and they're going to only buy that and nothing extra.
That's exactly what I'm hearing, Matt. And I mean, there's people out there pushing the narrative to all their people. This is just a short covering rally. Well, doesn't it all start out like that? I mean, in a way. And
I view it as a trend change. I mean, we had a 75% discount on the lumber price in the last 6.5 months. And we went from all-time highs to really, really like 10-year lows on some things. And now the mills have shown they'll put their foot in the ground and they won't run at, you know, such and such a price. So the market's got to figure out where the real trading range is going to be going forward. And I think we're seeing that being discovered now. It doesn't start with a 3 or 4. It seems to be starting with a 5.
yeah.
So.
Yeah, and I know Greg tried to get Russ on. He was out this week, but I think Russ sent us an email over saying, yeah, Greg, some of the log costs have adjusted, but there's still high cost production that
I think he said he'd be available to be on in a few weeks in February, which will be, you know, kind of great to get an update from him, and just, you know, kind of tag teaming what Matt's saying. Yeah, I think in the general consensus is that, you know, there's still a level of uncertainty as to what the level of business is going to be. I mean, I think it's proved to be better than people had anticipated it to be, which is, you know, why people have had to keep coming into the market. And actually, if you look at the statistics, multifamily was unchanged last year and is projected to be steady at that level this year.
What percentage? What percentage is that now, Greg? Of multifamily? I mean, is it an all-time?
Pull it up, but I'm going to say back of the envelope, it's in the high. It's probably in the high 40s.
That's,
you know, versus an historical maybe 35.
Okay.
And you know, single family was down 26% last year, but the marketplace was reacting like this was 2008, 2009, and it's not.
Right.
I mean, there's still, if you look at the inventory of new homes, it's like 1.5 months based on sales. Granted, we still have, you know, and this was something that we talked about a lot, you know, the first half of last year was the record number of houses under construction. There still is a lot of houses under construction. And we've started to see over the last several reports, completions being higher than new starts. And I suspect that we'll see that for the next, you know, probably for the first half of this year anyhow. And, you know, until you get the supply of new homes, you know, up at a higher level, then you're gonna be steady on the starts at the levels that we're at now. We're not going back to 1.6, 1.7, but we're not falling. You know, we're probably not falling sub 1 million starts either.
And look at home builders. Some of them got in front of this pretty quick. You know, their profit margin, which is historically around 20% ish, went to 30%. So they had the ability to adjust a lot quicker. Like you said, it's not 2008, 2009. And I think if you shorted housing starts a month and a half ago, you're not real happy with that, right? I mean, some of those stocks were up 8% across the board on housing stocks yesterday. On home building stocks.
Well, that and the mortgage rates are favorable for them too, right? So my buddy of mine, mortgage broker guy I've known for a long time, was talking about, you know, back in November, I was talking to him about mortgage rates and what the Fed was doing. And he kind of spelled out his long-term hope, or what I would call his vision, but he was also kind of wishing it. He figured if we could get 30-year rates to moderate in the mid-5s, that the market would just absorb that and move on. And that sort of seems like what's happening at this point.
And look at,
yeah, actually, to your point, the ITV is up 40%.
It's, I mean, Think about that. So I will say existing homes. Let's just talk about that for a second. Greg, how many existing homes are for sale?
None of them right now.
Yeah.
There's none for sale.
How many are potentially for sale?
So this is going to be
All of them.
They're all available for sale at some price. But here's my caveat on that, which is why I think it's a big plus for new home sales in 2023. Everybody over the last 24 months that bought a new home, that bought an existing home or refinanced has what? They have an interest rate of 2.5%, 2 3/4, 3%. They're going to be very low to make a move and trade up for a 6% mortgage. So I think the turnover, the mobility on existing homes is going to be lower because of that fact, which is, like I say, I think is a plus for new home sales.
Yeah, the big trade out there right now is buy or sell your existing and buy a new home. That's because
you still with that have to pay the current mortgage rate unless the builder's buying you down.
no doubt. But I've seen buy downs, and I don't know if they're still there. I've seen big cuts on homes that were ready, if they still are. But
I have a question for Greg.
Go for it.
Concerning Florida, because I know Greg does a fair bit of business down there. I don't do any. So I'm curious, is Florida experiencing the kind of the same type of influx of new people moving to Florida as, say, Texas is? And then the second part of that question is, are homes cheap in Florida like they are in Texas, relatively speaking? I'm coming from a West Coast perspective where a starter home costs $500,000.
Yeah, I mean, the inflow of people to Florida is still very positive, and the relative cost of houses there compared to West Coast and Middle Atlantic, Northeast markets are still relatively affordable for sure. And I've seen, that's one of the things that's interesting about Texas is it seems like Texas and Arizona markets have slowed more than some of the other markets out there. And I don't know, that's anecdotal. I have no statistic on it. It just is a sense. And that was part of the thing when Ash and I were talking about, like, why the relative spread on number 3, because it's such a big item in that market, but the demand's not at the same level. And I don't know if you have what your sense of that is.
It wasn't for 6 months, really. I mean, we spent all of June through December, just shedding inventory on number 3 and watching the value of it fall to 10-year lows. But I mean, my demand for number 3 here in the last 30 days has perked up quite a bit. And it's based on actual starts. It's not based on speculation. It's just, like I said earlier, people got caught with a low inventory level. And, if you get a few trains that are slow to arrive and all of a sudden, one of your big builder customers lays 30 starts on you that you weren't expecting, then you might have to go fill them with some trucks. So my business has been much better here in the last month or so. And I expect that trend to continue. I mean, it doesn't surprise me, put it that way. But do I think that we're going to the moon? Nah, I'm still in the show me state here. I like where we are right now, and I expected it to happen. But then what happens next is the cloudy part for me. I like where we came from. I'm not sure where we're going at this point.
So I guess
I have to confess, I was really kind of expecting, after the wild markets that we had in, 20, 21, 22, I was kind of expecting the market to come down to a low and, just kind of lay there and bounce around for a period of time. It's kind of the equal and opposite reaction. So, I mean, the strength of this move has been, candidly, I say, has surprised me.
Yeah.
So I guess one of the feelings that I'm getting from buyers, and you, Matt and Greg, you both talk to a pretty good representation of all sides of the buyers. And Matt, especially in Texas, I mean, I don't think there's so many really many people that handle and leverage as much number 3 as you do down there. Do you?
Don't tell
and
I
anybody.
think,
It's a secret.
I think he just called you a big swinger.
Yeah,
I'm
don't tell
gonna-
anyone. It's a secret. Don't tell anyone.
I'm gonna scale this to where the housing starts are, where we're at now, versus where we're at a year ago. We know they're less, but whereas some of these big yards used to keep 3 months of inventory, are they keeping 3 months inventory right now for the business that they have? If you went to their yards
No.
right now, I agree with
No.
that. That's what.
No,
and they're
nobody is. Only the independent guy that's like owned by a guy that's been in the lumber business for 40 years is. That guy might be doing it. And there's some jobs that have been held up that might count as, extra storage of inventory at this point, but I don't think there's very many retail yards in Texas that are loaded up for, the springtime season at all. The market's changed a lot in the last 10 years. If you think about who owns these lumber companies, right? They used to be a lot of independents.
Absolutely.
And they've all been bought up by the same companies. There's like 3 companies now that own them all.
That's my point. Where you used to have 10 buyers making decisions, you have one now, and I don't know if they have that lever where they can make that call, right? And I guess my question is, if everybody woke up tomorrow and realized, even if futures traded back $100, but cash wasn't going to do anything and stay here, maybe go up for 3 months, how much lumber would have to be bought?
A lot.
Yeah, because I think right now everybody's like, we're done and we're going to go down, and I'm going to buy $100 below here again next month.
I mean,
No,
that would be
to
like,
your point,
that'd be
I
a hedger's dream right there, right? If you sold 520 and buy back at 420 and you own $300 inventory, you'd have some $200 inventory. That'd be great. Bring it on.
Yeah. Yeah, I think as to your point is, and if I think of the seasonal, I always look at historical seasonal. I go, hey, you know what? I mean, the market goes up in the first quarter, right? I mean, it goes up in the first quarter most years, and the lower you end the prior year, then the more potential chance you have for a rally. But and it typically makes a high somewhere between late February and early April. So to your point. I guess I'd look at it and say, hey, until here's the 2 things to look for. The market's going to continue to have strength until one or both of these things happen. Actually, maybe you need both of them to happen before it is. Futures goes from a premium to a discount. And all of those buyers that you're talking about, Ash, say, yeah, I don't think the market's going to come down now until, June, July, right? Until you and I think the market every day now, there's more people will make the decision going, yeah, maybe it's not going to come right back down, right?
Yeah.
And then I guess the third wild card is what the actual business is in the field. Obviously we got a lot of weather affecting a lot of part of the country right now, which it's winter and that's normal. But, I'll say, there's a lot of jobs that are held up right now, which is a backup of that lumber. And weather legitimately, slows things up this time of year.
Look at what I'm really hearing is, and not because some people do take a risk, but the inability or the lack of desire to take risk by a lot of people really puts Matt, you, and Greg, you, in the seat to get paid for what you do very well. Take risk and put wood on the ground, because it doesn't sound like right now. And it seems set up to let people do that, right?
I don't know. You broke up on me there.
Yeah.
Seriously, I lost you for like 10 seconds.
What I'm saying is, what I'm hearing is, for the lack of people wanting to build an inventory for whatever that reason is allowing people, Matt, like you and Greg, in your business, because you take risk on the downside too when markets moved up, but this is allowing you to do what you do really well. And I see like a great advantage for basically people like you putting wood on the ground right now, because it's going to be needed. And I don't think there's as much sitting around as normal.
I mean, I don't even go that far. That's a nice way to think about it, but I really just look at numbers of like, if you look at relative value the last 30 days, and 2x6 spruce was like $100 over 2 before. And I'm
Yeah.
kept thinking, well, 2x4 is undervalued, right? So somebody asked me in a meeting a couple weeks ago, what are you buying? And I'm like, anything 2x4, any grade. Doesn't matter. Economy through premium. That's what I want to own is 2x4. I don't care about 2x6 and wider. Now, you can make the same kind of argument if you look at like Western species of 2x12. I think 2x12 Hem-fir is like half price of Doug fir. So people that can switch back and forth, they might want to look at 2x12 Hem-fir, those types of things. That's the kind of stuff I think about. The other part of what we do for a living is what Greg talked about a second ago is just seasonality. I mean, so if you can pay attention to seasonality and relative value, you'll do okay in this business over a long period of time. It really it's not any more complicated than that.
Yeah, and if you can switch and identify trends, right? Like being bearish is great on the way down, but when you realize there's a bite on too, you got to be able to do that.
I mean, it's hard, but you have to trust your instincts.
Yeah,
I was just going to switch over and give some kudos to the MX Exchange. The word on the street is volume's really grown pretty substantially here, and a lot more traction. We're looking.
We had a great month in January. We're looking to do it in February. We have 4 new salespeople on here going out and pushing the platform, looking about lumber. So, what's up, Kitty? So we've got. Appreciate it, Greg. That's awesome. Hey, today the Fed comes out, right?
Yes, just along that for for our viewers out there. I mean, the new platform, how's it? Tweaks. I mean, where are they at? I mean, should people be up on that and kicking the tires?
We had a press release today coming out showing people how to log on, register. It's going to look a little different. It's going to be more like, instead of looking like E-Trade, it's going to look more like Robinhood. We wanted to make gamification of the experience, right? So, as with any startup, we're working through any bugs our users report back to us, but we've got the live platform going as of today. And one question I want to ask you real quick, Greg, is Fed comes out. Are they out already? Did they do anything yet, or what time do they?
I think it's I think 1:30 or 2.
And what's the consensus?
They're probably going to go. I think they're going to go a quarter, and then say they're going to watch the data.
So are we going to pump this bubble back up again? Consumer?
I mean, I don't think there's a bubble to pump up. I mean, legitimately, you'll be. I think that'll put you at 4 3/4. Fed funds rate. I mean, inflation is coming down. So, I think. And honestly, I think it warrants that. I think you're looking for. We could be in for an extended period of time here where. The market makes the adjustments. But I mean, listen, long term, real interest rates need to be higher than inflation, right? So,
right.
I mean, you're still technically easy right now with inflation above interest rates.
And just one thing I need to get off my chest here: if anybody's on social media, don't send any more memes out about eggs. We all know. We all know they cost more. I got in front of that whole thing 2 years ago when my wife started making me buy organic. So I've been paying $8 for eggs for the last 2 years.
All right, guys. Hey, listen. Hey, great. Hey, it's
Thanks for having me.
Great to be back. Good to see you, Matt. Happy New Year.
Yeah, you too, man. I hope you're doing well. I hope you're feeling great.
Yeah, you know what? I'm back to probably 65, 70%. I mean, another 5% is about as good as I get.
Look at Ashley too, man. He just looks like a stud with that beard, and he's been working out. He's Mr. He's
getting in the gym. He's leaning me.
You know what it is?
Happy New Year, everyone.
Life and
there you go.
Cheers, guys.
Have a good day.
See you guys.
Bye.